XRP price crashes 10%. Focus on Bitcoin yen's descending triangle as Fed rate cut bets rise. Traders are ramping up expectations for Fed rate cuts in 2026, which supports the bull case in BTC. However, the bond yield differential suggests JPY strength ahead. This is a daily analysis of top tokens with CME futures by CoinDesk analyst and chartered market technician Omkar Godbole. Bitcoin's BTC dollar-denominated price continues to fluctuate below $120,000, hovering around major intraday moving averages, which provides little directional clarity. Hence, we are focusing on bitFlyer's BTC/JPY pair, which displays a well-defined descending triangle at record highs, making it easier to analyze the trend. Usually, the descending triangle is viewed as a bearish pattern. Its downward-sloping upper trend line, representing lower highs, indicates that sellers are progressively gaining strength, and hence, an eventual decisive breach of the horizontal support line is said to confirm a bearish trend reversal. In the case of BTC/JPY, the horizontal support is identified at 17,160,000 Japanese yen, $117,000. A move below that would strengthen the bear grip, shifting focus to the rising trendline support. Conversely, a breakout from the triangle will likely bring new lifetime highs. The bullish case looks possible as traders are increasingly expecting more Fed rate cuts for 2026. Interest rate futures data show that traders are now pricing roughly 76 basis points of rate reductions for next year, up from 25 basis points priced in April. Furthermore, the rising yields at the long end of the U.S. government bond market and those in other advanced nations point to expectations of continued fiscal support for economy and markets. The outlook for yen against the dollar appears constructive, as the spread between 30-year U.S.-Japan bond yields has dropped to the lowest since August 2022, signaling JPY strength. A yen rally could lead to a bout of broad-based risk aversion, potentially capping gains in risk assets, including BTC. XRP $3.1122 has crashed over 10% in the past 24 hours, consistent with bearish signals from the price chart early Wednesday. The price sell-off found support at around $2.99 early Thursday, which corresponds to the 38.2% Fibonacci retracement of the significant rally from $1.90. However, the subsequent recovery to $3.10 may not have legs as momentum, represented by the Guppy multiple moving average indicator, has flipped bearish. Further, both the Guppy averages and prices are now decisively in the bearish territory below the Ichimoku cloud. Therefore, a retest of $2.99 appears likely, which, if it fails to hold, could lead to prices sliding to $2.57, the 61.8% Fibonacci retracement. On the higher side, a move above $3.35 is needed to invalidate the bearish bias. ETH continues to print lower highs and lower lows on the hourly chart, establishing a downward trending channel. The 50 and 100-hour SMAs have produced a bearish crossover, and the 200-hour SMA is fast losing its bullish slope. In addition, prices have established a foothold below the Ichimoku cloud. All things favor a continued slow and steady descent. Only a move above $3,740, which would take prices back above the cloud, would revive the immediate bullish outlook. SOL, hourly chart resembles Ether's, with prices moving through a downward sloping channel, having established a foothold below the Ichimoku cloud. In addition, the Guppy indicator is now positioned decisively bearish. The immediate bias remains bearish as long as prices remain below the lower high of $192. Read more. Altcoin season hope dim as traders unwind bullish bets. Crypto Daybook Americas. Omkar Godbole is a co-managing editor on CoinDesk's markets team based in Mumbai, holds a master's degree in finance and a chartered market technician, CMT member. Omkar previously worked at FX Street, writing research on currency markets and as fundamental analyst at currency and commodities desk at Mumbai-based brokerage houses. Omkar holds small amounts of Bitcoin, Ether, BitTorrent, Tron and DOT. AI Boost indicates a generative text tool, typically an AI chatbot, contributed to the article. In each and every case, the article was edited, fact-checked and published by a human. Read more about CoinDesk's AI policy.